Elon, I know you're tweeting about Doge and crypto and getting wrapped up in all that, but Tesla stock shareholders need you to tweet about Tesla stock. In this video though, seriously, we're talking about whether or not Tesla is a good buy at its current valuation. It's had a bit of a haircut when it comes to the stock price, starting at around $900 for an all-time high, coming down to around $620. So it's a few $100 billion of market cap that's come off the stock. In this video, we're going to be talking about my opinion on where I think fair value is for the stock, as well as talk a little bit about the growth story, the narrative, maybe a little Cathie Woods and her prediction for Tesla stock, which was written a while ago, but I just want to cover it because I did a full DCF on Tesla as well that I want to cover. All that good stuff in this video. Stay tuned. So I'm not going to hold this over your head the entire video. I'm going to tell you what the fair value I believe the stock is worth, and then you can decide if you want to watch the rest of the video and hear me blah blah about Tesla, Cathie Woods, and why I come up with this valuation. But for me, the fair value of Tesla stock is around $439 with a 30% downside based on this current value of $621, and I'll go into further detail. But there's a little backstory with Tesla stock and myself in regards to me trying to trade it back in the day and not really playing around with it from a long-term perspective, because I always viewed the company as just another car company, right? Electric vehicles never excited me that much because I figured the big companies would just come out and dominate Tesla once Tesla paved the way. The year of 2020 is when Tesla stock just absolutely exploded to the upside and just kept on going up and up and up. And that's what got me to really dig further into the company and realize that maybe it's not just a car company. Part of the reason I've always looked at the company as just a car company is because when you look at the financial statements, most of the revenues is coming from automotive sales and leasing. When the revenue is only coming from one place and the majority is automotive, I tend to think it's a car company. Don't get me wrong, it's still majority of a car company, but they do have segments within their company to grow into future revenue streams, and that's being valued into the company. For me, I never really looked into the future for Tesla. I was just looking at negative cash flows. It seems like a terrible business, and a lot of the profitability is coming from these regulatory credits that they're selling to other automotive companies. So there's a couple of things that separates Tesla from Ford, GM, all these legacy car companies, and it really comes down to the focus on technology disruption and towards a sustainable future when it comes to energy. So you have this automotive piece of the business, right? And they're kind of on the forefront of the technology when it comes to kind of making Tesla and buying a car this whole experience, because they have a cult customer base. And then you have the second side of the business, which I don't cover too much in my analysis of the stock, but it is slowly growing and it is an interesting market, the market of renewable energy. And there's really three segments that excite me, but the most exciting part about Tesla for me is the autonomous vehicle market, because it's a fast growing market with a compounded annual growth rate of around 39.5% through 2026. Now, unfortunately, I don't have a Tesla myself. I would love to own a Tesla one day because it is a cool car. But from what I understand, the self-driving technology that they have isn't fully autonomous. So you can't just get in your car, sit and take a nap in the back and get driven to work or wherever. That would be awesome. When it comes to self-driving, they are, though, one of the leaders when it comes to getting to that point. But there is competition. So there's Google with Waymo. You have the legacy car companies investing in smaller companies that are just focused on self-driving. You have Mobileye, you have all these robo-taxi companies. There's a lot of people that are involved trying to break into this growing market. Another faster growing market that Tesla's obviously in is the electric vehicle market, with a compounded annual growth rate of around 22.6% growth. Now, for me, this isn't as exciting as autonomous driving, because for the electric vehicle market, it's really just hardware. The legacy companies can come out with their own electric vehicles, and they'll have competition when it comes to these other giant companies. They're not just going to give up, die with the, diesel engines and gas-powered cars. They're going to adapt. As I mentioned, a smaller percentage of the revenues come from energy or renewable energy, and this market isn't supposed to be growing as fast with a compound annual growth rate of 6.1%. But that's because the market is already massive. So if you look at by 2025, you're talking about a $1.5 trillion market. At this point, I'll admit, defeat when it comes to not fully understanding Tesla's business in the past. I see that Tesla is more than a car business and probably should be traded or valued more than just a car business. Granted, that doesn't mean that you'll pay anything for the company, which brings me to the valuation. And let's talk a little bit about what Cathie Wood of ARK Invest, who is a mega Tesla bull, obviously with her ARK Invest funds around 10% holding Tesla, it makes sense that she's talking her book a little bit, but she does go into detail about her assumptions when it comes to her price target. Right off the bat, you have this nifty little graph that shows the expected value of Tesla in 2025. And I love the fact that, it's so simple and, the bear case, the worst case possible is a $1,500 price target. Cathie, what are you doing? Come on. That's the worst case scenario. I'm sure someone could draw up a scenario that's worse than that, but let's dig into the details of what the bear thesis is. You have to remember my style too. I tend to be a little bit more conservative with my estimates, so I'm not throwing out crazy numbers in my own valuation when it comes to Tesla, but the bear case for 2025 for Cathie has some items in here that are a little bit questionable. So for instance, you have an insurance revenue of $23 billion in 2025 when it doesn't even exist right now. You have $42 billion for a whole network of human-driven ride-hailing revenue of $42 billion. So she's baking in some pretty high estimates when it comes to revenue projections in the future based on businesses that don't necessarily exist yet. I guess in the bull case, or the bear case, she doesn't have the autonomous ride-hailing revenue, which would be just robo-taxis. That's in the bull case. What is pretty cool, though, is ARK Invest did make their Excel model with the valuation on all the assumptions available via an Excel download on GitHub. I'll put a link in the description below if you want to check that out. I'll give her that there probably will be some operating margin expansion over the years. And then when it comes to deliveries, when it comes to cars, it's probably going to increase. She has around 5 million deliveries in 2025, which is around 43% growth every single year, which may be a little aggressive, but I guess that part may be possible. In terms of the price target of 1,500, if we talk about just a return each year through 2025, that's a 21% return based on the current stock price, which sounds pretty good, and it is good, but it's not mind-boggling due to some of the downside risks with the stock. At this point, you may be saying, wow, you really sound like a bear right now. Where's all this negativity? For me, I'm just being more conservative with my estimates. I'm not saying that Cathie is 100% wrong. It's just with her assumptions, it's kind of euphoric, right? You have these estimates for revenue that don't exist yet. That's just not my style. If those, assumptions come true, yeah, you should be buying the stock with both hands at a $3,000 price target. It's whether or not you believe in those assumptions and you really believe in Tesla is just going to dominate. If that's the case, it makes sense to buy the share at its current price. For me, though, using a little bit more conservative estimates, I come up with around $439 per share. That comes to, some assumptions with operating margin expanding a little bit to be similar to Toyota, and then also the margin getting higher through 2025, ending around 14%, factoring in more software revenue and higher margin business. And then, it's one of those things where the stock ran up a ton in 2020. The stock could trade sideways and never get to my 439 target, wait a couple of years. So it makes sense to reevaluate in a year. If the stock trades sideways, it may be at fair value again. I see two main risks when it comes to Tesla. One, you have the regulatory credits that are kind of propping up the profitability for the company right now. But realistically, once Tesla gets to a certain size and a certain amount of revenue coming in, those regulatory credits will be a smaller portion of their overall free cash flow. So we don't have any knowledge of when those credits will end. It most likely will come when all the other legacy companies no longer have to buy these credits from Tesla. The second risk would be the competition when it comes to autonomous driving that I was talking about earlier. If Tesla doesn't dominate and win that market, you have potential for other companies to get in those robo-taxi services, work with other car companies and just implement their software. So if Tesla isn't the clear-cut winner, there may be some subdivision of technology across all companies where there isn't Tesla owns all this autonomous driving, which I think is partly built into Cathie's model. Yes, there's a massive market for autonomous driving and it would disrupt logistics companies everywhere, but is Tesla gonna win that 100%? That's not certain. To sum things up, I do like Tesla as a company. Disruptive, innovative. Elon's a little crazy, but maybe that's good when it comes to the innovation side. It's a cool company and I would want to own it at the right price. The assumptions built into the current price are a little hefty. I just want to see some of those financials follow through, and there would be a point where I'm comfortable with buying it at a more reasonable valuation. I know you may be saying, well, why didn't you buy it in 2020 when it was only a few $100 billion? Just the financials weren't there. I didn't see the vision yet. I was a little skeptical with the huge run up. You live and you learn. But if we do have a large pullback to that area that I was talking about, Tesla seems like a decent bet. And then if I get in at that price, obviously I'm hoping Cathie Wood is right with all of her predictions. Hope you guys enjoyed this video. If you did, give it a thumbs up and consider subscribing to Main Street Wolf, where we talk stocks, investing, options trading, anything to do with money. Thanks guys for watching and have a great day.